Hey everyone, so I've decided to do something new where I'm looking at and doing a reaction video to some recent interviews on CNBC. So with Tesla, we can see that Chamath recently came out and provided an investment case for why the share price has gone up significantly, which I found particularly interesting. So let's take a look.
Let me just ask you about Tesla, because they had their earnings last night. They beat. The bears would say they beat because they sold these tax credits, and how long are these credits going to be a sustainable business model? What do you say? You bought into Tesla, or bought into the debt a long time ago.
I think this is a really important example of a much bigger trend that's happening in the stock market, which is that retail investors now have access to so much information that it's almost on parity with people that work in traditional investment organizations. And what we've seen is that's happened is that the quality of that analysis and the ability to see around the corner is as good, and in many cases better, than traditional investment firms and the way they view the problem.
So I find this quite interesting. Obviously Chamath's now come out and said that retail investors can have the same insight that some of these institutional investors can have. And, it's clearly true. We see here a recent article saying that, Tesla, they're ripping into what investors are considering, the truth of this business. And, if you watch interviews and podcasts by ARK, for example, there's real insight into what Tesla is capable of. The institutional investors aren't really looking at. And a clear example is this interview.
CEO and founder of GLJ Research. So we want to hear your entire bear case, Gordon. And how many years have you watched as this has just sort of confounded people with your view? And have you been recommending a short the entire time?
Yeah, so we have been recommending a short the entire time. And, quite frankly, it really kind of took off late last year. So
I'll put the link down below for that video, but it's quite hilarious kind of understanding his insights and, obviously how that's compared to the price chart and, everyone that's investing at the moment. So let's look at the next point.
So from day one, you have had this massive tension between the bulls and the bears on this company. And the bulls basically saw a long-term trend around electrification, and the bears tried to play with balance sheet mathematics. Of course, if I said, you can sell 90,000 cars, but then if you negative sell 100,000, you've not sold 10,000. And you would say, what does any of this mean? You can use any convoluted logic to try to be short this stock. And what you would have done is just lost an enormous amount of money.
This is quite funny. He goes in and talks about a lot of people losing a lot of money. But, I guess the interesting thing that we can see from here is that he's really looking at what is happening on a quarter-to-quarter basis. And, this is not something that you can really look, from a short-term perspective. This is a company that is, will be a long-term success. But, when that will happen is unknown. And, I think the insights to that is also shown out in this interview with Musk on ARK.
Yes, exactly. So like last year, we basically doubled our global fleet. Cumulatively, we made and delivered more, about as many cars as we had made in our entire history.
I know.
Right, exactly.
Crazy.
You guys know, but I'm just
crazy.
For the audience out there.
Most people thought it was impossible.
Yes. And if you do a linear extrapolation, it certainly would be. But when making estimates against an exponential, small changes in the calendar breakpoint have enormous percentage differences. The time difference is small, but the percentage difference is enormous. Now, I'm saying things that you guys know, but this is for the broader audience out there.
Yes, no, we want this. Yes, we want people to understand this.
Right. Like getting to 5,000 cars peak production per week was offset by approximately 6 months from my initial estimate last year. So I thought we'd be there end of 2017. It took us 6 months longer. In the grand scheme of things, 6 months late for a massive new program is not much. But this was characterized in the press in terms of the percentage of units instead of a calendar shift. And so it was perceived as a massive shortfall when in fact it was merely a 6 month delay. And when I give these, say, my guesses for the future, if you move 6 months or 12 months, these numbers it can be 50 to 100% different. So, but if you say like, what's my guess for 2021 is 1.5 million cars for Tesla, something like.
So interesting thing here is that he mentions the differences between calendar breakpoints and exponential growth, and it's also insightful, and it also explains a bit of what Chamath is kind of coming out with, and the explanation of how an analyst actually looks at this from a quarter to quarter as opposed to looking at it from a long-term perspective of it will be achieved, but the timing isn't necessarily something that's an exact science.
And so what we're going to see now is that the stock is going to become part of the S&P 500. It is the leading edge when it comes to electrification and decarbonization. And here's the thing, Andrew, what the bulls will get right and what the bears will ignore from here is that this is no longer about cars. That's the first wave of growth. And I think people are pricing in an evisceration of traditional autos and an enormous shift to EVs, of which Tesla will get the disproportionate share. So now what is the bet? If you ask me as an investor who loves that company, it was in page 4 or 5 of their quarterly earnings release where they talk about the energy business.
So again, another good point that he puts in here is that he already understands what's priced in cars, new models, etc. That's in there. But what he's pointing out now is that this business is transitioning from a traditional, electric automaker into what is now becoming a large energy business. And obviously from these quarterly reports he's mentioned, we can see that that's been announced, and obviously has to be considered going forward.
And they said a couple of interesting things. The first is that it was profitable. And the second is that they're also producing software now that allows effectively anybody to become a distributed utility. Now think of that for a second. You are talking about one of the most predictable, reasonable businesses that have raised hundreds of billions and trillions of dollars of debt. And what Tesla is going to do with their battery packs and their software is all of a sudden allow each of us to be in the energy business as well. Again, people will get angry. They will not understand. They will try to push back, and they will be wrong. And what's going to happen is that this stock is now going to represent the totality around decarbonization and sustainability. So it was really great to own this thing around cars for the first 4 years. I did it. I made a lot of money. But now I underwrite this company as a bet towards decarbonization, towards deregulated energy, and towards the ability for all of us to become our little micro utilities.
Another little savage point he puts out at making a lot of money, which is again obviously quite funny, but he points out into what Tesla is going forward. It is a energy business with obviously quite a long runway for growth still, and that's obviously now being priced in today, but the question is will that continue to go further? We see that ARK has provided a base case valuation, a high case and a low case, and the low case is around that 1,500, so obviously it's got quite a long way to go. Anyway, let me know if you enjoyed this video, and let me know if you would like any other additional content or reactions to other interviews. I thought this was interesting, and we look forward to doing more of it in the future.